Unfortunately, employers in California or any state that are large enough to have an experience modification, it really causes employers to walk on eggshells.
Welcome to the Self-Insurance Podcast, brought to you by CRMBC. Every week, we're interviewing industry experts, restaurant operators, and brokers to talk about the world of workers' comp self-insurance in California. Hello, and welcome back, Mike McDonough, the broker owner of McDonough Insurance Services. Thank you for joining us again.
Good morning, Kay. It's great to be here. Thank you.
And it's easy to have Mike as a repeat guest because he is actually the author of the book, The Employer's Guide to Workers' Compensation, and he has 70 tips in that book to help an employer reduce their costs related to workers' compensation. How many years have you been working in workers' comp, Mike?
A little over 30 years.
And about 20 some years working in self-insurance, right?
That's correct, yes.
And that's what we're talking about today. Today, we're going to talk about the major differences between being in a self-insured group or being in a traditional insurance company for workers' comp. And one of the biggest ones is the way in which we expect the member to communicate with the insurance company. So for example, in a traditional carrier, a member might not communicate certain things that they would in a self-insured group. Talk to us a little bit about this in the example that you just told me about.
Well, this is a great topic, Kaya. And, unfortunately, employers in California or any state that are large enough to have an experience modification, it really causes employers to walk on eggshells. And what I mean by that is when an injury occurs, they're looking for every way not to report it because they know, in their mind, it's a myth and so forth. But there's also some truth to it that, if they, report a claim, that it's automatically going to drive their rates up. So they are afraid to report it to their carrier. Where self-insurance, it's a bit different because we don't have an experience modification, and the employers, we want them to report every injury because it helps us help them lower their cost. So it's a flip of versus not reporting versus reporting. So it really takes a while for an employer to get into that and buy into that new process. But once they understand it, it works great.
And you literally had an example of this where you had a client who wanted to go pay cash so that they wouldn't have to report to their insurance company. Tell us that example that you just had.
I got an email this morning, client, and it says operations person, and she sends, "Hey, we have an employee that's injured. Can we just pay it first aid, send him to the clinic and pay cash?" And I said, well, before you do that, let's take a look and see what the injury is and see what the doctor says. So I said, most important thing is get your employee checked out and we'll worry about the finances later.
Right. And we do something called near miss reports. So we actually want our members to tell us everything because the chances are there's more that we can do at the beginning of a claim to keep it from getting litigated and to take care of that injured worker. Whereas if the employer kind of pushes it under the rug and hides it, the injury can get worse. It can become litigated. The employee can get scared, and then no one's communicating with them. So then they go hire a lawyer. What else?
Well, you're onto a good point there. And the lack of reporting is what's driving the cost up. And so the employers aren't doctors. And so it's just really best that, they turn it over to their team. And so the self-insurance group, we look at claims completely different. We're looking at, okay, how do we take care of this injured worker? And then, we incorporate all the people that we need and resources to help mitigate that loss. Where, the employer with the traditional carriers is wondering, should I even report this? Who do I call? And so the delay in communication is where the employer in the traditional market is going to experience higher rates because of that.
And it's really unfortunate because ultimately, the reason that we have workers' comp is to take good care of the injured worker. While it's true there is fraud, and when there is fraud, we look at it and we address it, and we have private investigators and we fight it. But ultimately, there's a because of this conflict that has been created with the traditional carriers, there's some employers that are forgetting that part of it. And ultimately, when an injured worker is truly injured, they need to be cared for, and they need to be cared for quickly and communicated with quickly. And let's talk to me a little bit about that, what you've seen with your clients in terms of this idea of that it really is about the injured worker.
It's all about the injured worker. That's why it's called workers' comp. It's about the worker. So the quality of care. And so with self-insurance, because the number of claims doesn't affect you, or reporting every claim doesn't necessarily affect you, it encourages immediate reporting. So we see a better result as far as employers putting in their handbook and making that part of the job description. Hey, if you get injured on the job, you need to report to your supervisor right away, so we can let the self-insured group know right away. So we get the team, whether it's a first aid or it's a medical or indemnity, we're getting the whole team involved, and there's no, any repercussions to an employer for doing that. Where a self-insured or the standard market, the employer is going to be hesitant. And what happens is when you're hesitant, that delays treatment. And so maybe they don't want to send them to the doctor, or, okay, we got the doctor here, but now they want to do physical therapy. And so what happens is the employer starts putting out money, right? And they start thinking, oh, it's just going to be 1 or 2 massages or a couple of physical therapy treatments. Well, now what they've done is they've now accepted that claim.
Mhm.
And what that means is now the insurance company is on the hook for that claim because of the omission of, sending them to the doctor, paying out of pocket, versus calling the insurance company who, potentially could have put that claim on delay. So if you're not communicating with your insurance company and you're holding back information, man, that clock is ticking as far as the dollars it could potentially cost you. Or in self-insured group, everybody's working and there's not necessarily any money being involved yet. We're just trying to, manage the claim and make sure that the injured worker is getting the best quality care, and we worry about the finances later.
And that's one of the massive differences that a lot of people don't understand between the traditional and self-insured. When you're in a self-insured group, you are an owner of this group. You're not buying insurance from a third party who is out to earn a profit for the shareholders of the company. And we talk a lot about the fact that when there is litigation, the attorneys that are hired to represent you, the member, not the insurance company. And that creates a massive difference in how claims are handled. Talk to me a little bit about that.
That's a very, very good point. Defense counsel is very important. It's key to settling claims. So my experience is the law firms are selected by the insurance carriers. You don't even know who those law firms are. So the claim is reported. You get a representation letter from an applicant attorney. You turn it over to XYZ insurance company. A lot of times, Kaya, they don't even assign it to defense counsel. Some of these carriers are now letting the claims examiners to save defense costs by calling the applicant attorney to say, okay, what's your demand, and things like that and so forth, versus turning it over right away. And so what happens there is that the claim can, linger on and so forth. So the objective is to settle or, close that claim as quickly as possible. But when you don't understand who your defense firms are or who's even representing you, and their interest is actually the carrier, not you, versus when you come over to the self-insured group, those defense panels understand that, hey, you understand that you're working for the members in this group. And so we can't afford to keep claims open too long because you're costing these members in the group, you're costing them money. And so what we do is we, introduce our members to our defense panels. So we create relationships between our members and the defense panels. So when a litigation claim comes through, the employers know that there's backing and there's support and so forth, and they know who's working on their behalf, and that there's a common understanding that they're both working, the employer and the defense counsel, to reduce that employer's cost, but more importantly, get that claim closed as quickly as possible.
And one other thing that we were going to cover today is when we're talking about differences in how we can make a difference between traditional and self-insurance, because we already talked about how the self-insured group is owned by the owners, but it's also managed by people, the other restaurant owners. So in fact, we're a restaurant self-insured group. So our board is made up of restaurant owners who are also members in the group. So there's a very big difference in our strategy and what our goal is. And that's why we are able to, when we get this information, it doesn't automatically translate to, oh, your rates are going up. Because we are looking at how do we always take care of the injured worker? How do we share best practices among different members? And one of the biggest things that you talk to me about quite often is the employee handbook. And that's one of the most important ways that an employer can really have an impact on their entire workers' comp program. Talk to us a little bit about that.
Yeah, I'm a stickler for the handbook because I've realized how workers' comp safety and employee handbook go hand in hand. And so, what I mean by the handbook is that employers are not enforcing the handbook. And so, if they see somebody working in an unsafe manner, you have general managers looking the other way instead of stopping that employee and possibly looking at correcting it. And if it's a pretty serious safety risk, that they're written up for that. And because the more employers that keep toxic employees around, it affects morale, it increases the cost, it affects the employers where they don't really like a general manager who's treating employees unfairly. So you have people calling in sick more often, they're using their benefits more. Bad employees that should have been terminated 5 years ago are still on the books, should have been terminated. All these things are contributing to workers' comp claims and post-termination claims, retaliation, and it's really driving up the cost. So our clients, we recommend, and we have all their handbooks reviewed by our HR, and we go through the handbook to see what their disciplinary program is. Do they have a substance abuse, protocol in their handbook? Do they have a pre-employment or post-accident drug testing? Do they have a texting and driving if they're doing delivery? We're looking at all these things because the employer is so busy running the business that they're not thinking about these things. Or if they're wearing too many hats, then what happens is, they're going to run into trouble. So you could have a double claim where you have a labor claim for wrongful termination as well as a post-termination claim. And so those things, it's really driving up the cost for employers. So the employee handbook is crucial to helping mitigate workers' comp claims.
And obviously, I look at things through the lens of a lawyer. And there are so many times that if the employer just had the employee handbook, if they had just followed the employee handbook, it would have saved them from so much liability down the road, including PAGA lawsuits, including wage and hour lawsuits. There's so many different lawsuits that happen, wrongful termination, because either they didn't have the employee handbook updated, they didn't have the employees sign it, they weren't enforcing it. So on a very practical level, this employee handbook is a very important tool and really insurance policy to protect the employer from a lot of other costs.
Oh, 100%. And the value of keeping the wrong employee versus terminating them right away. I don't mean terminate right away, but I mean, if somebody's been around for a while and they've had some disciplinary issues, why are you keeping them around? Because ultimately, by keeping them, they may know your business and maybe they know it better than a lot of other people, and you keep them around for that sake. But if you look at the potential cost of what it could cost you, like 7 figures, if you really look at the numbers, it doesn't make sense to keep that employee any longer.
Right, right. Well, Mike, that's all the time we have today. Thank you so much for joining us again. And I'm sure I'll have you back again because there's so many things that we have to talk about. But thank you for joining me today.
Thank you, Kay. It's always great seeing you. Thank you so much.
Thank you for joining us for the Self-Insurance Podcast brought to you by CRMBC. If there's a topic you'd like to learn more about, or if you have any questions, just email us at info@crmbc.com. Remember to subscribe, like, comment, and share, and join us again next week for more tips on self-insurance.